don't all lenders do the same thing? Are interest rates really that different between lenders? Don't you guys have the same programs and pretty much the same rates across the board? Well, today we're going to dive into why choosing a lender that works for you is actually something you want to take your time to do. You don't just want to jump in with anybody that can get you pre-approved. So let's jump in. When it comes to lending, most lenders actually have pretty much the exact same products. A lot of us can do FHA, VA, conventional, USDA, jumbo loans. A lot of people can do refinances, whether it's cash out or HELOCs. Now, overall, the goal of all lenders is pretty much the same when it comes to buying a home. It's to get you into a house and to ask the questions we have to ahead of time to make sure that we can actually get you approved for the loan that you want. And while it's true that our job may be pretty much the same, there's definitely some big factors to take into account when choosing your lender. And let's name a few of them. So first things first, keep in mind when you're choosing a lender that you want someone who you trust. You want a lender who's going to take your interest in mind, who's not here to make a quick buck, who's not just looking at your finances and saying, hey, I think I can do something with this, but someone who you trust to actually look at everything. They see all the ins and outs of what you're doing. They can see your debt to income ratio. They can see your credit report. We get to see every credit card payment you have, your car, your credit card, how much in monthly payments you're doing, how much you make. We have to verify all your income. You want someone you're going to trust for that information. And, while we all have to sign paperwork saying, obviously we won't talk about it, one of the biggest things with lenders you trust is not someone that sees what you make and says, hey, you can afford this. But you want someone you trust to say, hey, I see what you make, but I know where you're comfortable making your payments. So this is where we're going to get you guys in at. Someone who's not going to be telling your real estate agent, hey, this is actually how much they qualify for, even though that's not what the amount of money you want to spend monthly, because you really want to stay within your budget. So first things first, when choosing a lender, find someone you trust. Find someone that you know is watching out for your best interests, not just their own. Now, number two, are rates really that different between lenders? And the reality is they're not crazy different. I mean, you will find some lenders with better rates and some lenders with a little bit worse, but a lot of them kind of depend on the program. The biggest thing to look out for when shopping rates is how much they're costing for each rate. Now, I always like to explain this. Every single rate has a cost. So when you're coming in at what's known as the par rate, that is the cheapest rate you will find. So as of right now, a good example is if I qualified you for a mortgage and say you had a 720 credit score, as of today, when I looked at those rates, that was around a 4.75%. Now, that rate is the par rate. I'm not quoting anybody. I'm not saying if you call me right now, I'm going to give you that rate. To clarify, this is not a quote. But something to remember is that rate will change. So right now, the par rate is at 4.75 with this. That is the cheapest possible rate for you. And what I mean by cheapest rate is every rate costs money. So either you're paying us or we're paying you to take that rate. Now, I'll explain this a little bit more in the next video I have coming up, but every rate costs money. So when you're getting quoted rates, you're actually just getting quoted the cheapest possible rate. Now, what you can do is you can always buy down the rate, and keep this in mind when shopping lenders is, some rates are cheaper per se, but you can always buy down the rate. So say we're at a 4.75, you want to buy it down to a 4.5, maybe that'll take $1,000 or $2,000, and you pay that out of pocket to actually get a cheaper rate to lower your monthly payment. You can also, in reverse of that, take out a lender credit where you actually take a higher rate, like a 4.875 or a 5%, and what you do is we actually give you a credit for taking a higher rate, because you say, hey, I'd like to get some money back. I'll take a higher rate in order to get that money back. So we can actually give you a credit of a couple hundred or $1,000 or a couple $1,000, depending on which rate you decide to take. So keep in mind when shopping lenders and looking at rates that most rates are going to be similar between lenders. Not exactly the same. Some will be cheaper than others. But when you're shopping rates, really what you're doing is shopping that lender for their price on those rates. The other thing to keep in mind when shopping rates is that a lot of times what you're paying for isn't necessarily just the rate. You want to see what that lender charges. There's processing fees, origination fees, administration fees, all sorts of things that lenders can throw in that you're actually getting charged for by using their services. Now, keep that in mind when shopping rates, because just because the rate may be cheaper doesn't necessarily mean the lender is. And same back and forth. The lender may be more expensive and the rate is cheaper, or the lender may be cheaper and the rate's a little bit more expensive. Keep that in mind. Rate is going to last you the entire length of the loan or until you refinance, whereas that origination fee is a one-time fee up front just to get you started. So sometimes it's worth it to take a lower rate with a higher origination fee. Just make sure you know the balances of each one. Now, not to jump too much into the loan estimate, but you'll also see some other costs on that sheet. So when you're looking at shopping lenders, try not to take those too much into account. You'll see title and escrow fees, you'll see other charges, you'll see loan origination fees. The only one that really matters is section A on your loan estimate, which is going to be the actual lender fees. Everything else can change depending on who your title and escrow companies are, what city you live in, what county you live in, what certification fees. And say in Sacramento County, we have to do a flood certification fee to make sure you're not in a flood zone. That costs this much here. Somewhere else it may cost this much. So keep that in mind. When you're shopping lenders, a lot of that stuff is up in the air except for your rate, which you can lock in when it's time to actually get in contract. And secondly, the actual lender origination charges. So those are the two biggest things to look at when shopping lenders and comparing prices. The last point I want to hit today is, does it really matter to use a local lender? Now, things to think about when choosing a local lender. If you are with, say, an online-only lender, not to throw anybody under the bus, but you're using an online-only lender. Now, these online-only lenders don't know the market in your area. They don't have experience on the ground here where you're at. Whereas a local lender, a lot of times has relationships with title and escrow companies, has relationships with inspectors and real estate agents, and can really give you a good estimate of, hey, this is kind of what this market is doing. This is what I've seen. Really making sure that they're looking out for your best interest. One of the other biggest things is, as a local lender, I'll show up to your house signing. When you sign your closing documents, I want to be there. I want to be there when you get your keys to your house because I'm involved in this process. You're working with me as a local lender the entire way through, from the beginning of the process to the end. I'm the only one reaching out to you, letting you know, hey, I need these documents. Hey, this is where your loan is at. Hey, we're in underwriting right now. I'm waiting to hear back. I don't have any news for you. You want to be hearing those things from someone and not just hoping everything's going well. Now, another big plus side of using a local lender, a lot of times their turn times are faster. Being a local lender, we can close loans. For example, this last one I closed was in about 15 days. Now, keep that in mind. Our underwriters are local. I can reach out to them. I can talk to them. When they have a question and they need something from me, they can reach out directly to me. So keep that in mind when shopping local lenders, is not only do we know the market you're in, we have relationships with the realtors. We can talk to them one-on-one. And I mean, it's personal. It's a lot more personal for me as a local lender to show up when I see what you've been through and how you've walked through this process of buying your first home or a second home or third home. And I can be involved in that process, and I want to be involved with you as your lender, getting to know who you are and what's important to you. That's the last thing about using a local lender. What's important to you? I can't tell you how many times I've talked to people that said, yeah, we're pre-approved. And when we get into it and we start talking, I say, what are you pre-approved for? What loan are you using? How's your interest rate? And things like that people don't realize. They think once they're pre-approved, they're just good to go. And the reality is you are. If you're pre-approved, you're good to go. But the question is, are there other things that matter to you? So say you're only planning on being in the home about 3 years. Does it make sense to pay for a lower interest rate? Or do you want a little bit of credit back so you're using less out of pocket so that when you move in 3 years, you have a little bit more money in your hand? Same as, say you wanted to put 20% down, but you realize by talking to a lender, you guys run numbers and realize that 15% down may actually make a lot more sense. You can keep more money in your pocket, have more money in the bank for when you guys are planning to move. Now, these are things that's one of the biggest difference between local lenders and online lenders. Not that online lenders can't do this, but one of the biggest things I come across constantly is seeing people who get quotes who are told, hey, you're good for this amount, but they don't actually know what that means. And they don't know what the difference is if they put down 20 as opposed to 15 as opposed to 10%. They don't understand how much money they could be saving or how much more money if they decided to put down it could lower their monthly costs. So good things to keep in mind when talking to a lender. Find someone not only you trust, not only that's going to be honest with you about all your fees and your interest rates and walk you through every option, but someone local, someone who can actually walk you through everything that's going on in your market, who's out there in the trenches every day dealing with this stuff. Because when it comes down to it, the lender is going to be your mortgage and your finance professional when it comes to the home buying process. So really find someone that you trust to be honest with you and be straightforward and know what they're walking into. Well, that's it for today. If you guys like this video, please like, comment, and subscribe. I try to respond to all the comments. And yeah, hopefully you guys enjoyed it. Go follow my social media as well, linked above. And I'm looking forward to continually making videos for you guys and helping you understand everything that goes into the home loan process. So thanks again. I'll see you later.